Hello, everyone, and welcome to another episode of Flipping Out. This is Paul Lizell, and today with me I have Dave and RJ. And Dave and RJ operate out of Columbus, Ohio area. And their business, I've seen them from their infancy to, not quite the infancy, to the maturity here where they are just growing and expanding at an unbelievable rate. They have a great philosophy, great long-term growth potential with what they're doing here. And we're going to talk about how they're hedging inflation. We're going to get into a lot of different things, commodity prices, real estate prices, valuation, maybe even a little crypto talk. But first, Dave and RJ, why don't you kind of tell us how you got started and where you're heading from now?
RJ, kick us off here, brother.
Paul, thank you. Thank you for having us on here. I'm enjoying a nice breakfast wrap at a vegan place. I'm trying to take care of my health because what's all this for if you don't have your health, right?
100%.
Yeah. So, like if your listeners haven't heard of Dave and I, we're nothing super special. Our parents just taught us how to work really hard because that's what they knew in the industrial revolution days. So we didn't really have a lot growing up, but we saw them working their butts off. And I think that's one of the reasons why Dave and I got together in 2012, because we had kind of similar stories. He had gone off to Arizona to kind of do his thing right out of college. I'm sorry, right out of high school. Didn't go to college, went into Arizona. I went and kind of did my own thing, broke free from my parents' hold on me as a young guy in Youngstown. So kind of had to figure it all out over there. But we were kind of on our own. And we, Dave and I, when we met, we actually met at a real estate seminar. So it is one of those truths, like those stories that you kind of hear about, like how people say your net worth is your net worth, right? Your network is your net worth.
Yep.
Your network's important. And so those seminars and those mastermind meetings, and that's where we met you, Paul, is very important.
Yes.
So back in 2012, I'm sitting there on stage from this real estate software, I forget, Freedom Soft, I think is what it's called. I stand up on stage and I'm in a testimonial from Columbus, Ohio. And it so happened Dave was working with that company, and I was in the, he was in the back handling some of the sales. We linked up at that event, and I was sharing my story with him, and he was sharing his story, and we just kept in touch for a little while. I think that was back in 2000. But actually, we met in 2010. We kept in touch. He wrote me a handwritten letter, Paul. So
Dave's
he's old school, right? And those handwritten letters still work today when we're trying to connect with some people in our network. You got to take care of your network and relationships. We can talk about that more in this conversation, but we met finally again in 2012, and I was showing him numbers of what was going on in Columbus, Ohio real estate. And back then you could buy single family homes, duplexes for $25K all in, $25K all in. Okay, super cheap. These houses were not in tear downs or anything. They just needed cosmetic type rehabs.
Mm-hmm.
And we would rent them out for $750, $850. And so I was telling him about these good deals, and he was also in looking out for his next opportunity as far as a cash flow standpoint, because he's going to share here like his upbringings, but he learned very quick back in 2005, 6 and 7 that it's not a speculation play with this real estate. You got to buy for the cash flow.
Yeah.
So we partnered up in 2012. I think that first year we bought close to 20 homes. Really had no experience landlording. Our mentors basically said, "Hey, get out there, shake the money tree. Here's some guidance. Here's some money, and let's go get rich." And I remember at times we're sitting there at that cold ass kitchen table trying to figure out how to how to get more leads through the pipeline, but also how the hell do we talk to these tenants? You know, how are we going to set up this rent to own? So we kind of had to figure it out a little bit, but we did get some guidance from some really good mentors who we still do business with today. And that's how we got our feet wet in the rental property business. We started buying and holding, and then eventually it led into kind of what formed a turnkey company. And so if you guys don't know what a turnkey company is, it's a company that handles, you know, finding the property, renovating it, renting it, and property management. We found a little flipping niche from becoming buy and hold investors in 2012. So I'm going to pass it to Dave. He can kind of fill in from 2013 to 15 and on.
Go
ahead, Dave.
Thank you, RJ. Thank you for having us, Paul. And you know, it's a struggle. Everything worth.
Phone going off. Yeah, I love it. It's nice tone.
Everything worth getting after. You know, it takes a lot of work. It takes a lot of courage, and I think, you know, having a partnership. You've been around, Paul. You've been around a lot of masterminds. You've been around a lot of real estate influencers. You've been around a lot of real estate entrepreneurs. Very rarely, would you agree? Like very rarely have you seen partnerships like RJ and I flourish the way we have for so many years.
It is a rarity. There's no doubt about it. And what you have to have, and this is why you guys work so well together. You guys have so much synergy, more than any other partnership I personally have ever seen and been around. You both have the same business model with what you guys want. You understand the cash flow. You understand the growth. You also are similar ages, right? You're pretty close in age, fairly close anyway. And you also both turned to increase and improve your health back in 2016, 2017, really, really did unbelievable things to get your body fixed and your mind fixed, which totally leads, look, you guys, that's why you guys, it's like you're one mind. You guys both have the same model. You're kind of like one mind.
We have compared ourselves to like a yin and yang type of model, but really the thing, Paul, that allows me to operate with RJ is I know I can count on him, and he understands karma, and there's a spiritual element to it where, you know, if you're out there screwing people over, it is going to come back. Like, you know, there's very much of a higher purpose to a lot of the actions, you know, like I just, you know, I couldn't hurt, I wouldn't say I couldn't hurt a fly because I kill flies constantly. But when it comes to like even stealing a small amount, the universe doesn't care if you're stealing a nickel or stealing $5 million. It's still stealing. Like the other day I was at Big Lots. Big Lots is one of the big corporations here. And do you guys have Big Lots in the
Philippines? Yeah. I go to Big Lots.
It's based out of Columbus, and I was walking out of the Big Lots, and I realized that the gal at the checkout counter did not ring me out for the candle that I bought.
Nice.
And I was like,
"Uh-oh, got to go back in."
I know, it's a dilemma, and I'm like, "This is a test, right? You got to take it back in and pay for it, you know." Yeah. Like I don't know, but that's the kind of guy that RJ is as well. He's going to do the right thing, but we have a lot to talk about. What's going, I mean, okay, so Dow Jones today is at 34.2, NASDAQ is at 13.9, S&P's at 41.99, Bitcoin's at 57, right? Probably 57, 58.
Somewhere in that range, yeah.
Are we in a bubble, Paul? What's going on in the financial markets right now? I mean, everything's at all-time highs, basically.
I think we're in a total and I don't know whether, I guess it is a bubble. It's a Fed-induced bubble, right? I mean, we are printing so much money. So when you print money like we are and you hand it out like we are, that money has to go somewhere. So it's going into the stock market. It's going to the crypto market. You know, the Robinhood kids are buying stuff on that. PayPal, all these different sources you can buy cryptos on. It's getting easier. So it's going into that. It's also going into real estate big time, right? All these hedge funds, they got to put their money somewhere. Speaking of hedge funds, they're in your market big time. They've been in the Columbus market pushing your prices up, which is a positive for you as well, because it has pushed prices up. But what we are is an inflationary bubble. And the question is, where is it going? When does it pop? How does it pop? How long can this continue to go on? Because if you look at Japan, they had what used to be called the lost decade, right? Well, it's now the lost 3 decades. And they just keep pumping, pumping, pumping. It continues to go and go and go. Difference is we're the reserve currency. They're not. So the question is, where is it going? Where in your thoughts is it going?
Great question. So yes, for your listeners, we're talking about, everybody talks about, the Fed is printing money, but a lot of people don't realize exactly how much money is being created out of thin air, right?
Right.
And we'll get into it. And as many people know who follow me personally, I am not a big speculator / investor in cryptocurrencies. However, I think there's many gifts that the crypto community has given the world, and the biggest one being, making people realize that our current currency, the US dollar, is backed by nothing. No one was talking about the US dollar being a fiat currency until crypto actually started, which started after, the whole Occupy Wall Street, which was a complete government bailout of the banks, which was absolutely corrupt. And I'm not a big fan of the Fed. I'm not a big fan of the government, So I have more in common with crypto people, honestly, than I do anyone else.
Right.
But with this being said, a lot of people don't realize how much money was created out of thin air. So about $6 trillion, right? I mean, the word trillion flows off our tongue so loosely these days. I want you and your listeners to realize 1 trillion seconds, right? 1 trillion seconds. If I had, a trillion single $1 bills, and every second I threw one into a fire, it would take me over 31,000 years to get through the whole stack of 1 trillion.
Yeah.
Think about it. So the Fed has increased the money supply globally because it is the reserve currency, because we have nuclear weapons is the only reason, know. And the whole reason we have nuclear energy is because we recruited all the Nazi over 1,400 Nazi scientists after World War II. Which is pretty crazy in of itself. But the Fed created over $6 trillion, and there's more coming. But they increased the money supply by over 25% globally. Think about that.
Yep.
So if you had 4 quarters in your hand, and that represented the entire money system of the planet, and then dropped another quarter and a nickel, throw more in there, it's over 25%, right? Think about that. So what we're dealing with and what we're seeing is a massive influx of new money, and it's got to go somewhere. Everyone has money right now. U.S. savings rate right now, the savings rate for Americans is like through the roof. The people have more money in savings than ever before. But what's going to happen, I think, if history repeats itself, which it always does, is the majority of Americans who have that money in savings, what are they going to do with the money? Are they going to spend it on consumer goods, or are they going to invest that money to multiply it? And I think the majority of people, we all know, are going to spend that money. Yes. And unfortunately, what they're spending the money on is they're buying consumer goods. But where are the consumer goods coming from, Paul? They're not produced in America. Yep. So our current trade deficit is about $70 billion per month. So if you had a business, look at our country as a business, and we buy $70 billion per month, more than we can sell. Like, we're in the hole $70 billion every single month. It's absolutely crazy. But that's what we're dealing with. And I mean, you're seeing it in all the markets. Our thesis, and where we're very strong at, is we believe that affordable housing that produces a cash flow is the ultimate inflation hedge. I think it's the ultimate asset class. I think single family and affordable in apartments as well have been the darling child coming out of this COVID experience. And to get your hands on affordable real estate right now is definitely a difficult task, but that's what we are sharing with the world and teaching people. I think it's the ultimate asset class to be investing in right now.
I agree, and it always has been. I think it always will be. When you think about real estate and why it's the ultimate asset class, why it's made, 90% of the world's billionaires have been made by real estate, or millionaires. It's because of, one, you get tax favorability, right? You can write off way more than you can with real estate than anything else.
Explain that though to your listeners though. So what you're talking about is accelerating the depreciation.
Correct. Accelerating depreciation. So let's say I do a flip and I make $50,000 on that flip, but then I also pick up 4 rental properties.
Yes.
And those rental properties allow me to depreciate $75,000 that year in totality. That $50,000 gain is now wiped out by those rentals, right? So think about that. It's basically, you've created some income out of nothing there. And if you could do properly with those rentals where you refinance them, pull your, hopefully all your money out, you're theoretically into those rentals for nothing and you've gotten income tax free. So that's where a big benefit comes in with real estate, obviously long-term, plus you got long-term growth and appreciation. You have an asset that's not going to go to zero like cryptos could, like some stocks could, and some other items. So you just have a tangible fixed asset, and that's why I love it. And look, I love the cryptos, you know that, but as they go up, I'm going to be shoveling money out of them and putting it into real estate, no doubt. It's going to always happen.
I like the
There's
play,
a way
man.
that you can actually, you can take your crypto earnings and put it into real estate and not be taxed on your crypto earnings, right, Paul?
31 exchange is what we need. Yeah.
Let me ask you a question about crypto. I'm genuinely interested in RJ and I don't know. I know probably more about crypto than most crypto holders, right? But let me ask you, how is the sale of crypto taxed? Isn't it like normal capital gains as if it was property?
Normal capital gains. So there's going to be ways around it. And now you can, a company like BlockFi, so you could put your Bitcoin with BlockFi and borrow 50% of the value of it in a loan. So now you don't have to sell it, but you can take that money out and buy real estate with that. So that's kind of a way around, a workaround to it if you want to keep it long term, which is a nice feature, right? I mean, that is something that's a great feature. And then you refi that property, boom, you pay that loan back and you still have your Bitcoin. So there are ways to do it. You know, there's definitely ways that you could do that.
Well, what you just described is exactly the play. So, I mean, the Biden administration recently came out, increasing capital gains, this and that. Anyone who understands money understands that in a basically 0% interest rate environment, you only pay capital gains if you sell the asset.
Right.
Why are we selling any assets? Let's just borrow the equity out of, and if it's stocks, it could be margin. You just mentioned a crypto company that will give you loans against your crypto, or in real estate, you could just get a loan, a mortgage against the property. Why would you even sell anything in a super low interest rate environment? Just if you need the equity, pull the equity out in the form of a loan. It's completely tax-free. But that is the bubble. Like debt is the bubble. It's just more and more debt. I get it.
Debt bubble. You're right. 100% right. Absolutely.
So let me ask you this question. So I've been asked this question and like disputed this numerous times because I say, look, crypto is like a speculative stock. I compare it to like a high growth, Tesla, right? They don't pay a dividend. There's no, quarterly dividend or anything like that. So when you hear about people earning interest on crypto, how does that work?
This is interesting. So I'll give you a little bit of an education on staking. Have you heard of staking before?
No. And then I also want you to explain Tether to me.
Yeah, Tether has other issues, but I'll get into staking first. Staking is where, let's say I have a crypto like called Zilliqa. We'll call this.
So first off, before you get started, when I hear staking, I think collateral. Like I'm going to stake a claim on a property or a pawn shop or something like that.
Yeah. It's not that. It's kind of so you can swap cryptos. So let's think about some of these exchanges like Uniswap, where you can where you want to turn your Bitcoin into Zilliqa, say, right, which is crypto out there. So if I want to do that, you need a buyer and a seller. So by staking them, you're staking them with this group, this collective, this swap, this company, who will then be able to transfer, okay, I'm taking this many Bitcoin over here. We have enough ZIL that we can transfer and to make this transaction happen. It's kind of like
a brokerage house.
Exactly. It's like a brokerage house. And what it does is if you stake it and you leave it there with them, you can pull it out pretty much at any day. But if you stake it with them, you earn more of that crypto. For example, like Zilliqa, you earn like 20%. So it's a killer return. If you're like me and you're holding that one and you believe in that particular platform, that particular crypto, you don't mind staking it because you're going to be earning more of it if you're just going to hold it anyway, if you're not planning on selling it, that's a great way to do it. So you're earning residual income on it. It's kind of like earning a dividend. However, most dividend stocks don't pay, they don't increase too much in value. They don't fluctuate. What they gain, they give in dividends. These things not only give that dividend, but they also increase in value or decrease in value. So kind of wildly, right?
So what are the terms and conditions of this monthly payout? If the, what is it, Zilliqa? I've never even heard of Zilliqa before.
Yeah, it's a newer, younger one. It has smart contracts on it. It's kind of like an Ethereum type of crypto where you'll be able to do smart contracts, transactions, and things like that on it. Lightning quick. It's a really fast blockchain.
So what is a cryptocurrency? A crypto is you're buying a blockchain technology, correct?
Basically, yes, for most of them, except there are some, like you've heard of Dogecoin, right, with Elon Musk. It was kind of made as a joke by the owner. Doesn't do anything. There's nothing behind it. It's just what people believe the perceived value is. Whereas Bitcoin is perceived as like digital gold, right? It's a slow blockchain. It's not really meant for transactions. However, you can do transactions on it, but people have now looked at Bitcoin as, all right, this is kind of digital gold. So gold bugs people like me. I love gold and silver, right? I kind of went into that as another hedge against inflation as well. Litecoin, kind of looking at it as silver. Ethereum, I personally like the cryptos that have a great use case behind them, by technology like Theta. You probably never heard of Theta, THETA. They have Theta TV, which was created by the co-founder of YouTube. It's going to be a competitor to YouTube, interesting in a million different ways, but it also has esports on it. They have the non-fungible token platform, the digital artwork and all. That's a whole other thing that we can get into that I'm not into that stuff right now, but it is a big platform that people do things on. And then it also has online poker. So you can sit there and watch like a news network, say One American News on Theta TV, and actually earn T-Fuel, which is one of their tokens, which is worth, say, like 38 cents right now. So you actually earn it by watching it. It's pretty interesting. And if you're watching, let's say you and RJ have a show and I'm watching that show and I really like what you guys got, I can donate you T-Fuel tokens where you'd earn money. It's pretty interesting.
So what are current networks run on? So for instance, you mentioned Bitcoin, and when Bitcoin was first introduced, it was known as the cryptocurrency, right? A currency. It was developed to be money, right? And exchange transactions. You had just mentioned it doesn't make a good exchange of currency, right? It's slow because it could only do what, 5 or 6 transactions a second.
Yes.
Meanwhile, Visa could do 65,000 transactions a second. So when you're investing in a crypto blockchain, that's what you're investing in, is new technology that reigns superior over the current technology. Is that correct?
So right now you have that weird, unique blend of, since it's a newer asset class, people know the older names, Ethereums, the Bitcoins, Litecoin, and some of the others. And some of these new ones have much better use cases, much better technology behind them, but it may take them 3 or 5 years to overtake Ethereum. Say there's a bunch of them, like Polkadot's one of them out there, Zilliqa, obviously one of them, Chainlink, which does a myriad of different things, but also competitors out there, and Cardano, competitors out there of Ethereum. So they will eventually take a lot of market share from them, and Ethereum will suffer from it. Bitcoin Cash, because it's so transactionally driven, it's super fast and is great technology, will eventually overtake Bitcoin, I believe, as the kind of storage of wealth.
I've been thinking, so when it comes to this technology, are we saying this is like a better form of the internet?
Yes. So the Theta is trying to create Mainnet 3.0, which is to improve and speed up and be a better internet, basically, more or less.
So is this comparable to 5G?
Yeah, in a way. Some of it is, some of the newer stuff that'll be coming out, but we may be 5 years away from that, where we really get that.
What I think is big is that I heard you say is, not being married to one particular crypto. For instance, I think there's some, Bitcoin hodlers out there that are so diehard Bitcoin.
Oh, they are. There's out of control people with that. Like, I don't have time for that. I like a nice diversified portfolio.
Well, and not only that, but what you said is like having a use case. It's almost like having fundamentals. Like some people buy Tesla stock because of Tesla. You know, it's just like
They
Elon.
believe in
And I
Elon
love
Musk. Yeah,
Elon Musk is, I think, one of the smartest guys on the planet, as
I
a matter of
agree.
fact. But that's interesting. It's like you're buying, but I think the vast majority of people who are doing the crypto, you know, investing, if we call it investing, speculation, we don't know if it's going to be a
Yeah,
new internet, this, that,
speculation.
and the
Yeah,
other. But a lot of them could care less about it. It's same with retail Robinhood stock investors, right? They don't care
yes.
about the, you know, the performance or the fundamentals or anything like that. It's
It's
just
what's
a
going
matter of,
on Reddit. It's
I
what's
want it
going on
to
Reddit.
go
That's
up. I
right.
want it to go up in value so I can sell it. But ultimately, you know, things go up, and eventually, none of us, whether it be a speculative stock or crypto, we don't realize our money until we sell,
Yes.
right? And then when we sell, we are left with, at today's current time, US dollars. So now we're back to where we started. Now we have more, hopefully, than we started with. But what do we do with those US dollars is really the question, right?
Great question. I want to jump into one thing you had mentioned before. You're talking about Joe Biden's his tax plan, right? The tax plan where he's increasing the capital gains rate. One
Sure.
thing that we'll do for this is good for people to know out there.
Yeah.
People won't sell, right? So now there's less real estate available. We already have a shortage, right? So now we're all going to hodl because we don't want to pay those taxes on this thing,
Correct.
on any of these things. So now there's even less real estate out there. Now prices continue to increase. So the affordable real estate just dwindles even more, which is why I think we're in a great, unique opportunity to just continue to buy real estate as much as we can and acquire, because it's going to continue to grow for at least a foreseeable future, right? Until the dollar crashes.
I think that is the big catalyst. I think the crash, I think you had mentioned in the beginning, you know, what type of crash are we? Are we in a bubble? Absolutely. I think we've been in the bubble since you know,
2008.
Ben Bernanke in 2009, you
Yeah.
know, and QE 1, 2, and 3 is when, you know, it started the longest bull run in the capital markets that we've ever seen. And then, you know, COVID came and pricked the bubble, and
Yeah.
we had a 35% sell off in everything, including crypto. And you know, but we'll get back to that. But, you know, and then, so basically the bubble got pricked. So they created a new bubble. It's almost like the old bubble is now within an even bigger bubble by printing $6 trillion. What's interesting though, and we'll go back to crypto for a second, then we'll take it back to real estate, and we'll kind of share with you a little bit on the stuff we're buying and targeting right now. I think your listeners will get a lot of value out of that. And then I'd like to hear on kind of what you're seeing out there as far as generating leads. Off market inventory is at an all-time low. So we got to get a little creative when it comes to finding deals. But I find it interesting that, you know, the Bitcoin hodlers, and for RJ, if you don't know what the hodler is, it's hold on for dear life.
Yeah.
That's what they do, but they won't. No one holds on for dear life. You know, and when things start going down, everybody rushes to the exit. That's kind of how it happens. No one's loyal to anything. I mean,
I have a quick question, guys. Like, is it still like, if you're late to the game and you want to buy Bitcoin, is it too late? I mean, like, it's up at 57,000 now. It's worth.
57K. So I think Bitcoin is late to the game, but let's ask Paul right now. Paul, if you were to invest in crypto today, if me and RJ are going to buy some crypto, or RJ wants to invest in crypto, what's the best one to buy right now and why?
I personally believe Theta is going to be one of the biggest and best crypto out there. It's got the fastest blockchain, fastest for transactions, going to have smart contracts, has the non-fungible token platform, the biggest one out there, has its own basically YouTube type of channel out there that's growing, as it has agreements with Google, with Samsung, with Sony, with not Paramount Pictures. There's two major movie companies that are going to be operating out of them. So all your new televisions that you buy, Samsung and Sony, are going to have Theta connect on there, that Theta app on there. So this is one that's in its infancy stages that you can really get, is going to grow unbelievably well. Love it. Hard to buy on US exchanges. You can't get them right now in US exchanges. So you got to buy them and swap them. And like I said, it's hard to get them. That's a great one. I do love Cardano. It's inexpensive. Digibyte, I really like, which you can pick up for around 15, 16 cents. I've been buying it, so it's like 1.7 cents. it's security within these blockchains. They provide security within all these other blockchains. So their use case is great because they operate in a whole bunch of different cryptos, a whole bunch of different blockchains. So they're always going to be growing. Small incremental growth is what that owner wants. So those are some great ones to be in for sure. And, Bitcoin, you're never too late because just dollar cost average it. It's going to continue to go up. It will have crashes where it goes down, but it could be 100K at the end of the year. So it's a pretty solid investment if you're putting some in now at 57, 58, and it goes up anywhere near that 100K. It might only be 70 or 80, but it's still growing. But you're getting way closer to maturity with Bitcoin than you are with these other ones.
But in order to buy one, you need to have 57K. Was my
Well, for a whole one, you can buy them for $10 or $100.
$10. Okay.
Yeah, you don't have to go all in.
What crypto trading platforms do you use, and what are the good ones out there, Paul?
The easiest and it's US based one is Coinbase, but it's also one of the most expensive. There's Coinbase and Coinbase Pro. Coinbase Pro is made for traders, so you do get a Coinbase Pro account, so you can buy off that one as well. Binance. There's also KuCoin, which is another one, and I'll give you a few other ones that are half decent that I use.
I heard there's a new one coming out, and the former CEO of E-Trade is actually behind it. What's that one?
I have not heard of that one. That would be an interesting
Victory or something like that. But I think they're legit. Did an IPO. It's publicly traded on Wall Street. But anyway, nonetheless, I'm a pretty tough sell, Paul, when it comes to moving money out of real estate or cash, for that matter, into crypto, because I have a difficult time understanding it, and there's a lot to choose from. Right?
It's almost too much. Right?
It's almost too much. How many different cryptos are there? Over 4,000, I think. Right?
Yeah, there is. I only generally invest in, say, 20 to 30. Really,
let me ask you this question: the Theta, is that mined like traditional crypto, like Bitcoin? Is it the same principles as far as mining it?
They do same principles with the mining it. Yep.
And then where are the vast majority of these miners? Where are they located at globally?
Good question. So basically, you become a miner if you want to stake it. So you're staking Theta and Theta Fuel. One other use case I forgot to tell you on that too, which goes with the mining. So if you have what's called a Guardian node on your computer, where you have a server, they're going to have the new one for the mainnet 3.0, where you're basically allowing their users, their gamers, to use the speed of your internet when you're not utilizing it. So you've got your computer that's down, you're not using it all. It will draw from yours and give it to their stream, so their streamers don't glitch. So another great use case. They have 3 patents on their blockchain for this, so it's pretty damn impressive. But then you earn more T fuel by doing that, and you're basically mining it for them.
I'll tell you this. I'll tell you when well, for one, I mean, everybody on here understands that the Fed runs the show, yes, the biggest central bank. I love the concept and the ideology of crypto is like, let's be decentralized. We shouldn't need the government's approval to do a transaction. I completely agree with all that. But the Fed has nuclear weapons and they have the biggest military in the world, unfortunately. And that's like the way it is.
Yep.
But we are actively buying real estate, and, we feel strongly, I mean, inflation's going nuts. And I want your listeners to go right now. It's so funny because the Fed, I listen to every single Fed. I'm a big nerd, Paul. I listen to Jay Powell and the boys, and, they say we have it under control. Inflation is transitory. That's the word going on right now, right? Everything is transitory because we're coming out of COVID, and that's why you're seeing this inflation, right? It's we have it under control, this and that. They definitely don't have it under control.
They don't have anything under control. No,
they don't have anything under control. And it's big. It's really funny, but I think that's why gold has not shot through the moon right now, right? Through the roof, is because people believe the Fed, right? People believe that they have it under control. But it really reminds me of like 2008, when our current U.S. Secretary of Treasury is Janet Yellen, who was in charge of the Fed of San Francisco, and Ben Bernanke was chairman of the Fed at that time.
The fundamentals are sound. right?
Everything's fine. The mortgage, yeah, they're like, it's not a bubble.
Right.
The only mortgages that could be affected are the ones doing these ninja loans, and we're looking at it. We're going to regulate it. Da, da, da. No, they're always late to the party. They're always too late. So they said they had that under control, just like they're saying they have inflation under control right now, which they clearly don't. And I encourage your listeners to go and Google Trading Economics is a website. So you can do Trading Economics commodity spot price, and you can see up to date. And I encourage everyone, it's very clean layout. You can see the price of oil, you can see the price of wheat, corn, cotton, gold, silver.
Orange juice, right?
Everything's through the roof right now. It's absolutely, it feels like hyperinflation, but no one's talking about it. So I feel, the very best, there's several we could talk about. Gold, crypto, I'll give you that credit, Paul. I don't feel crypto's a good hedge against inflation, but there's several ways you can do this. In a hedge against inflation, let's explain, what is that? Hedge means a protection. It's like a moat. And let's pretend the castle is your money, and you need a moat, a protection against inflation, because what inflation is the losing or the decrease in purchasing power of your dollar, right? So you hear an old person say, oh my goodness, when I was young, a cup of coffee only cost me 25 cents. Now it's $5. Well, that's inflation. It's the same cup of coffee, but it costs a lot more. So how do you keep your money protected from inflation? I feel that affordable housing real estate is absolutely the number one play right now. RJ and I are actively buying, doing over 10 deals per month, spending a lot of money to find deals. But we'd love to get into that with you. And what are you seeing out there? Are you seeing just a lack of inventory like we are?
Yes. First, and to your point, agreed. Affordable housing is the number one best place to be. If I had a choice between cryptos and housing, it's going to be housing all the time, because I have that hard tangible asset that I can draw rental income from, and it's going to go up in value over time, especially if the dollar's losing its value. People need a place to live. So that's first and foremost, I agree.
That's that use case that you like with your crypto. Real estate is the ultimate use case, because you only need three things to live: food and water, and the third one is shelter.
Shelter.
Protect yourself,
And you need that. And you need that. So what I'm finding, obviously, inventory is crazy, right? So we're looking, and we always bought in online auctions off the MLS, and we still do. We still buy off both, but it's obviously less than it used to be. So we found alternative measures to do it here. We actually target a lot of newer wholesalers all over the country, since we buy all over the country, right? So it doesn't matter. And we're buying properties from them. We're buying decent deals. We're still buying the ones we like. We like them in a little more rural areas than the main, say St. Louis. We're going 45 minutes outside of St. Louis for us, because that's our better target market, longer appreciation and better pricing right now, and better cash flow on the rentals. So we're still targeting those things. We're doing wholesale deals still. We're doing a lot of wholesale deals. We're still adding rentals. I got a 12-unit apartment complex I have in Casper, Wyoming, that we're renovating. So yes, you just got to dig deeper, and you can look on Zillow for sale by owner. We really target them. We use our VAs to target them. Less deals, obviously, but when you get them, they're great deals, and they're cash flowing well, and they're great long-term holds, and you got instant equity. Even if the market drops, you're in good shape, right? Whereas if Bitcoin plummets, you're hammered, and you got nothing more coming from that.
Not only go deeper, like you said, but especially in your case, go wider. Too. You live in the Philly area, you're doing deals out in Wyoming. RJ, why don't you maybe kind of share with Paul and the listeners on how we've gone wider? I mean, we're based in Columbus, but we have expanded into other markets. We're kind of, I'm playing from the same playbook as you, Paul, but RJ, why don't you kind of fill in the listeners on how we were able to expand and go wider?
Yeah, a lot of it was determined by how far our property management team could stretch their arms, and that's what has kept us in business, is property management, is construction. And so it took us I don't know, probably like 3 years to really figure that piece out. And so in the last 18 months, we've ventured into some smaller markets, about an hour and a half, 2.5 hours away from Columbus. So we're in Cincinnati, Dayton, was the one that was, we saw a lot of opportunities there. And, everyone that probably doesn't know Dayton thinks that it might be like a Detroit, like it's super depressed, but it's not the case.
Good market.
Ohio still, it's a good market. Ohio still has some pro landlord laws, and it's hard for the other crowd to kind of compress that, but we see that it's still favoring landlords, and I think it will be for a while. We also ventured into in Cleveland because we saw that again, property management, we feel strong that we can still do what we do best, which is we have a rent to own model. We also just have a standard leasing model, and then with the lower price point, under 30K, under 40K, we can do which well, Paul, you're versed in creative strategies. We do the land contract model or selling it on owner financing. So it allows us to be a little bit more what's the word? Dynamic, kind of, we're kind of chameleon like. Anything that will come through our pipeline through the marketing that we've done, we're gonna monetize it.
Absolutely.
If it's a listing referral, we're gonna give it to a realtor in our team. If it's one that would be a bigger rehab, then we're gonna look to partner with some of the GCs that we know, right? So they have a vested interest in getting that project done. So we have a number of ways now to really skin the real estate cat. So it's allowed us to kind of look into some other markets because there's opportunities everywhere. And our model of being in affordable housing, buying and holding for the long term, we do a lot of BRRRR type transactions. For your listeners, that's the buy, renovate, rent, refinance model. And we've built some really strong relationships with some local banks, and that's the key in that model. So it's just a matter of how can we scale appropriately. If our management team, which now has over north of 1,500 doors, can they scale with us? And if not, then is there another management team that we can go visit? Because that's the biggest piece. The biggest piece to this puzzle is management. And we feel like we have a strong grip on it, and also the processes that we had when we had an internal management team. We know what to kind of look for to build and grow this portfolio to, Dave and I have a package of 400 homes right now that we're working on, and that's going to really 4X kind of our balance sheet and moving forward into the next 3 to 5 years. But we really want to gobble as much single family homes as we can. And also small multifamily, like we're not opposed to anything like that. It just has to make sense. Obviously the numbers have to make sense, and management has to make sense.
No, that management is always going to be the most difficult part of that. Property management is every big time landlord out there has issues with property management, right? You always have a problem with contractors, with maintenance, with tenants, all those things. That's always your biggest headache. However, it's a headache that's worthwhile because it brings the ultimate cash flow and ultimate tax savings. It's just something that you need to always work at and get better and better and better at. And it's been a struggle of mine too. We do it, and it's always been a bear. It's always been a struggle, and you just keep grinding through it and you figure it out, and processes work, right?
That's it. You got to hang in there. It's not like what people see on HGTV. They just pop in and flip a house and, they're set for life. You can flip houses. That's great. You'll make some cash, but that's transactional. So if you want to flip houses until you're 70 or 80, then go for it. I'd rather be hanging out down at the beach with my grandkids.
Yeah, have that cash flow. Basically, the goal of any investor out there should be build enough cash flow that it pays for all your expenses, all your living expenses, everything you need, right? Funds your retirement, does all that. Flipping is just an extra bonus. Maybe you do a flip or 2 or 3 or 4 to pick up more rentals, right? Because then you could potentially buy some with cash. Or me, like I'll do it, I'll flip some, put some in a rental, some in a crypto, and just kind of mix and match it there, right? But it's something I do a lot of flips, I do a lot of wholesales, but adding rentals is definitely key. It's just gonna be something to continue to do more and more of.
Paul, I got a question. Do you know what the #1 regret of any real estate investor is when they get later in their years and get a little
Selling
bit
those properties they bought early.
It's 100% the number one regret. I wish I would.
I mean, I've been in it since 2001, and those properties I sold from 2001, especially till 2013, the growth they had, like I could have literally just retired off those. So now it's just like acquire, flip to acquire, and work that
But
game.
to RJ's point and to what you reiterated, it's about the management. So yes, everybody's regret is I wish I would have held on to everything. But when you can't even keep the lights on, you got to sell too. You just have to. It's part of the deal. We all wish we could just hold on to everything. Believe me, we're huge. The biggest advocates. That's what we teach is to hang on to real estate. It's the total play. But I mean, to keep the lights on, flipping is essential as well. It's the ultimate business model. And flipping is highly taxable, but if you could grab a couple rentals, like you had mentioned, you can actually write off expenses against the rentals, against the income that you're earning from flipping. But yes, the number one regret is always, I wish I would have held on to more. But if you don't have the operations in place, it's not easy. You can't just open up a new market. I mean, it took us years to get into the Cleveland, Cincinnati markets, whatnot, because, if you don't have the team in place, if you don't have the management, if you don't have the operations, sure, you could go out and buy all these houses, but you're ultimately going to fail. Scaling too quickly. I would say scaling too quickly is the number one way out of the business.
Agreed.
People, they just want to be bigger and not better. And next thing you know, they stop showing up at the mastermind meetings. You don't see them anymore.
You just hit the nail on the head. And I'll never forget the first couple of years at Collective Genius, and we were in there together. I'm listening to the guys, and it got to be like a bragging match. I do this many deals this year. I'm doing this. Wait a minute. Your profit is decreasing. You're doing more work. Why are you doing that? For me, I was doing 100 to 135 deals a year, and I was losing my freaking mind. And instead, and I was only averaging $700, $800 per deal. Instead, I decided, let's take a step back here. Why don't I do less deals and maximize the profits out of those deals? Don't take every deal that comes along. Maximize what I can. Next thing you know, my profits were up to 12,000 and change per deal, and I'm doing 60 to 80 deals a year. Much more manageable, much more to my lifestyle, and I'm making more money. That was the key, with less work.
There's an old saying out there, Paul.
Probably more happy.
Way more happy. Yes.
And that affects your health as well. There's an old saying out there that it's not how much money or not how many deals you do, but how much money you make.
Yes.
And then, RJ, you could add on to that even farther. It's not how much money you make, it's what?
It's how much money you keep.
That's right.
I mean, you could, it's all good. Like these are all just vanity numbers, as you guys know now. We're a little bit more mature in the business, but people are, they say, oh, I've done 200 deals, and then your net profit's not even close to what you would have done if you were on your own. That's a problem. That's a problem. So
it is, and it affects every part of your life. I just want to get into what you said there, Dave, too. So if you got that extra stress, all these deals, and you're trying to keep a team, and you have, say, 10 people on your team, you want to keep them all employed, you're trying to make them all happy. Your stress, your life goes down, your eating habits get bad, you don't work out as much, you don't take care of yourself. Next thing you know, your health's going bad. So it could be a spiraling effect. That's why you want to make sure there's always balance, yin and yang, which you guys have. Always have that balance in life. If you don't keep that equilibrium, for me, it was really pretty simple. Put the family first. So I always coached my boys in travel baseball. So I always knew my first quarter was going to be great. My second quarter was going to suck because I spend so much time in baseball, way less deals that time of year. My third and fourth quarter were always killer again. So there's a cycle I had with that. Now I changed it because I'm not coaching as much, but it's important to have that. And if your priorities are to make sure you're coaching your kids and being around your family, so you have these good memories and they always look back favorably on it, then make your business fit your life. We're going to work your business as much as you can around your lifestyle. I think that's,
yes, sir. That's huge. Yep. That's huge, Paul.
Yeah. And you guys have done that. You guys have really, really done that and done a great job of that, which is awesome. And, you got that nice, steady rental income coming in, got long-term growth and appreciation. You just got all kinds of options. And you know what? And Dave, to your credit too, about selling these properties, sometimes you do need to sell some. And then in these up markets like we have now, you could sell some of these dog rentals to then buy a better rental, one that's always been a problem for you, right? Or always been a headache or constant problem with turnover with tenants. Get rid of that one, buy one in a better area. So it's always about shifting your assets too.
And a good play there would be the 1031. You know, you can 1031 out of the dogs and go into the hogs, is what we call it. You know, the big better areas. You know, in times of inflation and in appreciation. I mean, would you rather, if things are, you know, if the real estate market's appreciating, say, let's call it 8%, which I think is conservative in our times,
Yes.
would you rather own assets that are worth, you know, $50,000 that are dogs, or would you rather own assets that are worth $250,000? If things are appreciating 8 to 10%, do you want 8 to 10% of 250 or 50? It's like, no, go for the better assets. You're going to make more.
Yep, they'll appreciate more over time. There's no doubt about it. And also the 1031 exchange, which Biden wants to try to cut down.
I don't think they will.
I don't think they will either.
No, it's not going to. Too many politicians maximize these benefits. They're not going to take away all the good tax stuff because they got to pay them too. So
and they won't take it all. But he was trying to 500K and over. So again, single family falls into that 500K and under. So again, you're going to then hurt. The only ones that be 1031 exchange are the single family. Again, further exacerbating the shortage of single family housing and pushing the prices up, right, over the multis.
I was literally thinking about this while gazing up at the stars last night by the campfire. Tax programs where the government intends to tax the people to collect money to pay for things,
right,
they never work out. The politicians are never able to collect as much money as they think they're going to be able to collect from a new tax. But then also government spending programs always cost more than they say they're going to cost. Look at Medicare. Things cost 10 times their amount, right? So these government programs, they say, look, so for instance, the new Biden program is the American Families Act, I think is what they're going to try to pass. They're calling for like 2.1 trillion. Well, look, as time goes on, it's going to be 10 times that amount because people, you know, as we're seeing right now, when it comes to stimulus and government spending programs and handout programs, I mean, you're going to modify your lifestyle to maximize the max amount of free money. So everybody, when they pass a new thing like a government spending and free money thing, people all of a sudden, you know, for instance, with the American Families Plan or whatever they're doing, where do you see how many daycares end up starting to pop up? Because now daycares get subsidized by the government. So it's like, well, I'm a daycare now. Hey, babe, you don't have a job? Go start a daycare because we're going to get $100,000 a year from the government, right? So like the spending programs always cost more because everybody just modifies whatever is going on so you could take max advantage of the free money. But then the tax programs, the tax collection programs, never amount to collecting what they think because people avoid the taxes because they're real estate investors like us. And we have these conversations where it's like, well, okay, they're taxing capital gains more. Well, we ain't selling anything. We're just going to borrow against our assets. Like there's always a way to just avoid it. You just play the game, man. I mean, this is all we do. It's so silly.
It's the truth. It is the truth. You know, it makes us like transfer from asset class to asset class based.
Of course. There's always a way, but that's what we teach people. And that's where, you know, what we do with the cream, you know, we are the cream, cash flow, real estate, and money.
That's right. Rise with the cream, right?
I mean, you know, cream always rises to the top, and we like to think of our community as really on the cutting edge. I mean, we are constantly staying on top of what's going on with different tax programs or, you know, subsidies and real estate and marketing of what's working. You know, we invest tens of thousands of dollars a month into our own marketing, and we track it very thoroughly so we know what's working, what's not. And that's what we share with our community with the cream. So people who join our community, you know, you're working with individuals who do this every day. It's not like we used to do it and we're like kind of watch. No, we're in the trenches every single day. If we're not on a podcast with somebody like you, Paul, we're out there buying houses and looking at our numbers and seeing our own marketing dollars. We do this every single day. And if people are interested in checking out our community, risewiththecream.com. And it's been thriving, man. I mean, everybody in there is active and we're out there buying houses and just talking about cash flow. That's what we're about.
highly recommend it, everybody. Risewiththecream.com. I mean, you're not
Or
going to.
I think it's / crush it. /crush it.
Yes, that's
Yeah.
our paid group. Yep, risewiththecream.com / crush it,
Nice.
where you can enter our paid community. It's only $17 to join, $97 a month after that. But it's like literally having a community of people doing the real estate business at your disposal. It's like having a real estate consultant on retainer, you know?
Perfect.
I was in there answering questions today. Some people are going through a refi. They need help. Well, we know how to get the best terms on money. We know how to raise private capital. This is what we do. So people are getting a lot of value from it.
I mean, that's huge. And you're not going to get anything better. You guys are doing it. Unlike a lot of people out there, gurus out there, they used to do it, maybe potentially, some to a smaller extent than others. But you guys are out there doing it, living it, seeing it. So you know what's working now. You know what's going to work potentially in the future, because you guys are a lot like me. You're looking at future trends. Where are we going? What is being done today? It's going to cause a change tomorrow or down the road here, and affect negatively or positively on our real estate. So you guys are always in tune with that. That's why you're looking at, what was that website we were talking about, the trading economics?
I love that site. Yeah, I mean, I'm on Twitter a lot. I just follow economists.
Yes.
I'm a big Thomas Sowell follower.
Oh, he's the best. I love
Thomas
Sowell. Thomas Sowell's so good.
Yeah.
He's one of the most brilliant guys. You know why he's so good? Because he can take something that seems like it's a real complex thing and put it in layman's terms. And you're like, damn. Yeah, he nailed it. He is so good at that.
Yes. I'm a big Jim Rickards guy.
Another good guy.
You know, he's Peter Schiff. I know you had called me out. I think you said you sound like Peter Schiff, you know, when I'm dogging him. Peter Schiff he's okay. And I've read his books, and
he's got a lot of great things. A lot of great.
No, he's smart, but it's like when he's on Twitter, he's just like a little gnat. It's like annoying as shit. Yeah. Like he's got to tone it down, I think. I
agree with you.
I mean, I think he's smart, but I think he's playing the social media thing to get a big following, his podcast. Like he's playing these people. He's playing the game. So
his company to buy for them. Yeah.
It's a little bit tough to follow. And his funds have not performed well, quite honestly. Yeah. Really no. So people are not making a lot of money. And like, if you were to invest all your money into the Europac funds, and then also listen to his, thesis on that real inflation is like over 10%. Well, your funds that you guys manage are not even keeping up with the inflation that you're talking about. So there's a lot of contradictory stuff with him personally, but that's what we're up to, man. We're all about staying on the cutting edge. And you're absolutely right. Like, I'm not going to be the guy who like just calls out the old gurus who are just like not doing it anymore, because I don't want to like create enemies. But RJ's got to run.
Right.
Yes, thank you,
Thanks,
RJ.
Thanks, guys.
Peace out, man. I'm not going to be the guy who like calls out old gurus and whatnot and like, we do it, they don't, and like compare myself, because like I just want our results, and I want our community and the success of our community to speak for itself.
Totally. Absolutely. And look, say you guys are teaching the right principles, teaching the right things, how to manage your taxes as well as you can within the legal framework and scope, and grow your income and set yourself up to where you can retire and just live off the real estate and, work as often or as little as you want. It's tremendous. It's the American way, my friend.
We want to help as many people as we can, man. It's not a red thing, a blue thing. It's not Republican or Democrat. The government is bad. They want to take your money. This is
both sides they want to take from. Yeah, I agree.
They do. There's no such thing as like conservative values in Washington anymore. It's gone. All that stuff's gone. And the media and they work so hard just to keep us all separate. And
they do.
I just can't get down with it, man. It's just it's a big mess, and the government is way too big. And I mean, if you're a Thomas Sowell guy, you can't appreciate good government or big government. Like the current government, like it's a libertarian, man. You got to be, small government. Government was put in place to protect people, not employ people, and like not just give away like what they're doing right now. It's a big mess. I think one of the biggest gifts. I'm not a believer in crypto. Vastly because I'm, uneducated, but I don't hate on anyone who does. It's definitely here, and it's definitely here to stay. But I think one of the biggest gifts that crypto has given us is making people realize that our currency, our money is backed by nothing, and we've all been
Right.
robbed. We've all been
Yes.
shorted. I think it's a great thing. No one was talking about fiat currency. No one was talking about this stuff really on a big, level. What's the market cap of Bitcoin right now? 2
Uh,
trillion?
little over a trillion, I believe.
$1 trillion.
Yeah,
Like, think
1.2,
how
I
much
think.
people are invested in that. Like, that's insane. So I'm grateful for crypto that it is educating people. We shall see, what crypto reigns superior. Maybe it's like the telephone. Maybe it's like, look, the original telephone, didn't start out as a cell phone in your pocket that you could take pictures and do Zoom calls with, right? Maybe things will keep, on the cutting edge, or like maybe things will keep evolving like technology tends to do.
Yes, totally.
And I think if you're not married to any one individual crypto, you can probably, navigate pretty well through those waters. And
I think so too. Yeah. And then shift as you need to, and look at it like you said. It is a speculative class. It is not. It's a new technology. It's a new asset class out there. So only invest what you can afford to put in there. It's kind of like play money. Like you're going to Vegas, or you're going to Atlantic City, and you don't want to bet the farm. You don't want to be doing that. You don't want to be mortgaging your house. You don't want to bet with anything that you can't afford to lose. Good. It's been great for me. It's really grown tremendously, but I put a lot of time into the research to really know what the projects are. Not everybody has that kind of time. So I totally understand that's why some people just invest in one or a couple of them, right? Because they're only comfortable with one or a couple of them, which I totally get. But I probably spend 3-4 hours a day researching and learning about different ones out there, which is a lot. It's a lot. And the only reason I've been able to do this because our inventory's been down, right? So it's giving me more time to do that.
And it's your hobby. It's something you enjoy. I enjoy things too. It's okay, and it's good to keep yourself occupied. There's a lot worse things we could be doing with our time.
100%. But the most important asset class for anybody to be out there, never forget this, is real estate, affordable real estate.
Yes, sir.
You need to be in. It's where true wealth is created. And, it's hard to destroy it. And you look at it over time, it just always continues to go up and up. It has its downs, but it's always long-term going to go up because people need a place to live.
Brother, I could go with you for another hour.
I agree. We got to cut it out here.
I didn't even get into, government legislation on crypto or real estate. I didn't get into any of my good stuff. But no, I mean, we can go all day because this is our hobby. And when you find somebody with, similar values, it's really easy to talk about.
Absolutely. Always fun to talk,
man.
Yeah, I miss hanging out with you at the masterminds and stuff. We are in another one together here, so we'll be catching up and hanging there in the family mastermind. We'll see each other there plenty.
Yeah,
we'll always be talking about the economy and what's going on in real estate.
This is what we do. It's our hobby.
Absolutely. Yeah. And I really appreciate you coming on. My audience is going to appreciate the heck out of this one because we got into so many different things. And don't forget, everybody. RiseToTheCream.com.
Rise with the cream.
Rise with the cream. Yes. Rise with cream. I thank you. RiseWithTheCream.com /crush it. Right.
/crush it. That's for our paid community. That's where you get the good juicy stuff.
That's where you want to be, people.
It is. It's $17 and then $97 a month, and we're on there every single day answering questions, buying houses. We do deal alerts and like deal reviews. Every time we buy a house, we show you the whole community why we bought this particular house. It's in real time. It's weekly. It's every day something's going on in the cream. So
that is super valuable. So I highly recommend anybody out there. That is unbelievably cheap to be getting what you're going to be getting. A great education from two great people who are not out there to rip you off. These guys are only out there to make sure they take care of you. They legitimately want everybody in their community
to do
extraordinarily well.
Well said, sir. Thank you very much for those kind words.
You got it. Thank you. And hope everyone enjoyed this. We'll catch you in the next episode.
Bye, guys.